Alright, good evening, my friends. The biggest story of the year so far happened today, my friends. SVB, Silicon Valley Bank collapse, is the second largest bank failure in U.S. history. I'm old enough to remember 2008 and expect to hear words like too big to fail, contagion, and bailout. Now, there's no bailout for the people of East Palestine. Fuck them. But Silicon Valley Bank they're done, my friends. Again, no coincidence it happens on Friday. During the Obama years, FDIC failure Friday was a common occurrence, with hundreds of banks going into receivership like Silicon Valley Bank here did. And that's enough CNN, get fucked. Jim Cramer urged investors to buy Silicon Valley Bank stock 1 month before the regulators shut it down. And they're attempting to make a deal this weekend to try to save it, but we're going to look at the numbers. It's like $150 billion of unsecured funds are going to get blowtorched or corzined, if you will, if you remember that term from back in 2008. CEO of MF Global, stands for motherfuck him global, vaporized several $billion and somehow still walks around a free man. Hate that motherfucker. I lost a significant amount of money. And I think I got maybe 8% of it back. Fucker. Anyway, Zero Hedge. Again, not my favorite source. At least if you stay within the story, it's good. But if you get into the comments, it's AIDS. Expect mass layoffs, the real-world impact of SVB's failure. Again, this is too big for CNN to not notice. Also too big for CNN to not notice. A new color scheme for Air Force One to drop Trump's design, of course. Orange man bad, of course. For most people in America, a bank in Silicon Valley has failed. Will be forgotten quicker than a story about soaring shoplifting in their local supermarket, but it should not, my friends. Reality is a contagion of the shuttering of the 18th largest bank in the United States are widespread. They are heavily invested in venture funding, venture capital, my friends. All right, it's the second largest bank by assets. Bank failure after Washington Mutual. I think was that in 2008 or was that in 2007? I forget. The shit started breaking down in 2006 when subprime was revealed to be a massive, massive bubble that was hiding massive, massive losses. But they were treating it as money good and piling all sorts of derivatives on top of that. I can't even pretend to understand it all. But they were doing a lot of financialization of very obscure things without a lot of research. And this is probably happening again because it's pretty uncommon for interest rates to go from absolutely 0 to 5% in a little over a year. There is a long list of depositors who are over the $250,000 FDIC insured limit. Only somewhere between 3 and 7% of the deposits are insured. RIP. The following list, while incomplete, is approximately sorted by size of exposure. Hey, look at this cryptocurrency, USDC crypto stablecoin run by Circle. Just a reminder, Sam Bankman-Fried's fraud probably had something to do with this. So, bye-bye crypto. It's probably going to get murdered over the weekend. That's a figuratively, not the cryptocurrency will not literally get murdered. Anyway, Roku actually owns several of their products. 26% of its cash, $487 million with Silicon Valley Bank. Oh, corzined, block fee, also crypto space. $227 million in unprotected funds in the bank, according to bankruptcy document, which may be in violation of U.S. bankruptcy law. Roblox? Tried to play that game. It doesn't make any sense to me. 5% of its $3 billion in cash. It is a cash cow. Securities balance is held. Well, was held at SVB. Man, Roblox is a cash cow. I don't believe that. It's a worldwide phenomenon, my friends. My gaming channel on YouTube, which is politically neutral, everybody there plays Roblox. I think it's bizarre. Anyway, Ginkgo Bioworks. Only the cash balance of the company's wholly owned subsidiary Zimmergen is held in SVB, 74 million or cash equivalents. And again, this is stale data. It's from December 31st, 2022. Again, this is going to be a major story. I'm shocked CNN is even picking it up. Rocket Lab, not familiar. 38 million in its accounts with banks, 7.9% of the startup's cash and equivalent lending club. They still around? I guess so. Potentially losing funds of a deposit of 21 million. It's not material to its liquidity position or capital levels, and doesn't pose a risk to the group's business or operations. Payo, not familiar. 8.6 billion in total cash. Less than 20 million is held at SVB. Good choice of diversifying. Protagonist Therapeutics, 13 million, 10 million at Archer Aviation, and so on and so forth. Egypt, did I see that? No, iPoint Pharmaceuticals. Single-digit millions of dollars. Any other companies I know of here? A lot of biotech space here. Yeah, a lot of biotech. So these are internet startups, most likely based in the San Jose area. So Edward Dowd, great follow on Twitter. Let's just go through some of this. The buried lead on the SBV bankruptcy is they got caught sideways on losses. And again, I understand about 75% of this. They got caught sideways on losses in relatively safe market of mortgage-backed securities. That's what also blew up in 2007 and 2008. They rated these subprime mortgage-backed securities as AAA, and they were actually junk. Triple C, triple fish hooks, my friends. They made a 10-year bet that went south on interest rate increases. It was the interest rate risk, not the credit risk. How many other banks made this mistake? Probably a lot of them. They got the macro wrong and suffered the tyranny of bond math. When rates go from 0 to 5% in a year, it's devastating. This is just getting started, and many others likely screwed this up. Unrealized losses system-wide. So don't expect a cascade of bank runs immediately. And curiously enough, Wells Fargo, which is my bank, had issues today. Very curious timing indeed. There are no coincidences, my friends. The government will respond over the weekend. It's going to be a busy weekend for the FDIC, my friends. The fuse has certainly been lit. And again, don't know the speed of this unraveling. 2008, kind of, the fuse got lit in 2006. I want to say late 2006. And it didn't really blow up until 2008. And luckily for me, I was heavily invested in subprime mortgage-backed securities. And, it paid such a sweet dividend, too. And, what was the name of the company? Oh, God, it was, like Novastar Financial, I think it was. Wait, long out of business. I think it was Novastar Financial. I could be wrong, but that was a long time ago, many moons ago. They paid a sweet dividend, though. Super sweet. Made a ton of money and got out only about down 10% off the highs. Okay, standard playbook is the Fed step in and folks feel better for a bit, and it doesn't last longer than a few days or a few months. In 2006, it lasted till roughly about spring of 2008 when the economy blew up, and then John McCain basically led me to tear up my Republican voter card and register as no party affiliation. I think I voted for fuck you all in November of 2008. Okay, the speed in doing it during market hours is unusual. Yes, it's FDIC failure Friday. The list came out about 8 o'clock. And some of those doozies, my friends. And then in the financial crisis of 2008, this was done over a weekend with a shotgun marriage to another bank. Silicon Valley Bank is shut down by regulators in the biggest bank failure since the global financial crisis. I don't remember a bank going under in the Trump years. Maybe some did. I don't know. It wasn't a big deal. Ed Dow doesn't know the speed or panic, but nothing goes down in a straight line. That's very true. Even if you're holding a bag there's a chance it's gonna snap back up, get dead cat bounce, as they call it in the industry. Okay, so we have entered the quickening phase of events 7 hours ago, by the way, so about 3 p.m. Remain calm and avoid fear and panic. Do not panic. The people that are going to lose the most are selling first thing on Monday. Don't do that. The world's not ending, it's just changing. So this is sell side trading desk analysis here. Okay, a few things we'll see in the coming days, weeks. It was heavily integrated in the lives of many founders, not just their startup bank and lender that provided personal mortgage and other financial services. It's going to be a mess for the FDIC to unwind. All to any uninsured balance at SVB above 250K are in jeopardy because they have like a negative 1 billion cash on hand. I don't know how that's possible, but okay, so it's going to sell assets of SVB to try to pay out as much as possible, but it is all unsecured debt. So a lot of startups are exclusively banked with SVB as it's the covenant. It was the covenant of their debt. And the CEOs yesterday faced a hard choice: pull your deposits and go into default on your venture capital debt, or risk losing everything if the bank failed. Many chose to hold tight, as the failure seemed outlandish. Just ask Jim Cramer here. Just ask Jimmy there, whose pretty much track record of failure is remarkable. There is an inverse Cramer ETF account on Twitter. I think it got shut down, but he made a ton of money. So these venture capital firms may not be able to make payroll. Unpaid wages pierce the corporate veil, so boards are incredibly sensitive to employing workers they may not be able to pay. Because generally workers don't really work for people that don't pay them. So expect mass layoffs later today, Monday at the latest. I wouldn't want to be in Silicon Valley, my friends. But that's not my problem. So, Ed Dow predicted this on February 20th with, there was a 2 or 3 Sigma 30-year United States Treasury bond event, which happened again today, and he called it out. He called it out on February 20th. Again, that's why I follow him on Twitter. Jim Cramer, who does have a perfect contra-indicator track record, said JP Morgan is a fortress, and JP Morgan had to buy, who did they have to buy? Bear Stearns, I think, at a shotgun wedding. I think that's the way it worked. Don't recall. 2008 was many brain cells ago. I'll just leave it at that. The M2 money supply, and M1 is 2, which is cratering, which means credit is contracting as money is debt. The modern monetary theory about our fractional reserve currency has always been a scam, and I figured it was going to be uncovered in my lifetime. I was betting around 2010, surprisingly wrong. The Silicon Valley Bank, money is debt. Silicon Valley Bank and the others that will come was inevitable. The spice must flow. It ain't flowing, and it's going to lead to a painful death for many. So this is the St. Louis Fed report on M1, which is, I believe, the billions of dollars in circulation. Don't quote me on that. Again, this is not investment advice, but this goes back to, let's take it back to 1980 instead of 1959. I don't know how it got reset, but 1980. There we go. January. So as you can see, this is the line. It never really goes down, because the Fed was basically doing these, I think they're called temporary open market operations, and maybe some permanent ones. But in 2008, the Fed got off the rails. Bernanke, tons of liquidity injected into the system here. How Obama was able to even fucking succeed with an economy is beyond. I often wondered how that was possible. So this massive jump right here was COVID bullshit. The Fed just conjured up, $12 trillion out of nothing. And they wonder why there's inflation now. It's almost like people that were smarter than Ben Bernanke and our favorite Jewish Yenta, Janet Yellen, know these things. So in the history since 1980, and you can go all the way back to 1959 if you wish, this number never goes down. Well, it started going down on February 2010. 2022. That's when a lot of the inflation started. Yeah, no, it started going down in April. Yeah. Yeah, April and May, it started turning over. And that's never happened in my lifetime. So, very curious to where this leads, my friends. Stay tuned. Again, don't panic, but just watch this space. You know it's important when CNN's fucking reporting on it. So, anyway, that's that. It's longer video, my friends. Prepare for the worst. Today's even more dire than yesterday. Again, sports ball on CNN. Nobody cares. At least they approved a major drilling project. At least Beijing Biden's not that stupid. The diversity hire administration is not that fucking stupid because they need oil, my friends. Oil drives the economy. Anyway, thanks for watching. Pick up some non-perishable food and God bless.